All right, traders, welcome. It is Friday, January 12th, 2024. We're going to hit the daily video here. We're going to cover briefly the markets, but I really want to spend some time on the trade plan and into our tracking spreadsheet a bit today. So we'll just touch base briefly on the markets. Let me jump into that with you. And let's start there. I'm going to turn off my video so you can see the whole screen. And S&P moved up a whole $3.59 today. So 359 on SPX. So SPY up 0.33, 0.07%, pretty much a nothing day. We did sell off a bit earlier, rebounded, closed off the highs. We had PPI numbers come out this morning. Don't really see anything major in that. Showed inflation about 1% on the producer price index. The number came in lighter than expected as well. So some contradictory information here. Really, the market didn't know what to do, didn't move anywhere up or down. So SPY's still below the all-time high, just can't seem to get it. Bollinger Band's really tight. This thing's in a squeeze and looking to stay there potentially until something big happens. And I'm going to change my sheet up here to the easier chart so that you guys can read it without a bunch of lines on it. But overall, still, basically in a bullish trend on SPY. Things are going higher, but they're not that strong. If we look at the weekly chart, things are getting a little weak, even though we did hit into an all-time high on SPY. We just, for the week and for the day, we just really aren't doing anything there, and weekly starts to be looks to be tipping over a bit. All right, on the Qs, pretty similar story. We hit an all-time high 2 weeks ago. We have not gotten back to that level yet. Seem to be stalling out a bit, even though RSI and MACD are bullish on the daily. Looks to be rolling over a bit on the weekly. And if we look at the IWM, it continues to be weak. Now, it tried to rebound today. And in the session that we recorded early this morning and put out, if you haven't seen that video, check that out as well. There's a lot of really good stuff in that video. So if you haven't seen the video from this morning, which is basically yesterday's recap, plus some really good stuff in there, we started to bounce off the 21 EMA on the IWM and then just fell. MACD and RSI heading lower on the daily and the weekly. So they're both looking weak, IWM looking weak. Number of companies over their 50-day moving average. We're seeing that falling on the day. Put call ratio just fractionally higher on the day. So more puts being bought. As that starts to move up, that's going to be weak for the market. So if we start to head up towards this one line, that's going to be certainly a bit more of a bearish move. So a little bit bearish there. VIX just ticking up fractionally on the day. Nothing much to see there. On that session, if we look at the US dollar here today, basically dead flat, no movement, just sideways. It's been in a sideways range for almost 2 weeks now. So almost 2 weeks sideways on the dollar. It's not doing anything. The 10-year Treasury is bumping down on the day as well. So when that thing's looking a bit weak, which I still think that I don't know that we're going to go a whole lot lower than where we are. So we'll see how that all shapes up for us, but a pretty good drop today on the rates, but also TLT falling. Futures all down with the dollar just not moving much of anything, nothing major moving in any direction. The euro is the biggest mover at 0.29%, pretty much just dead flat on Forex. Oil having a decent day today, although it was up a lot more early and then fell and closed near its lows of the session. However, triggering a bullish PSAR signal today. MACD and RSI on the daily and the weekly both look like they're trying to rise, breaking out of this wedge. Not a strong breakout like it was looking earlier in the day, but still a breakout to the upside. If we take a look at gold here today, had a pretty good sized up day. So big day yesterday up and finished way off its highs. Today, it reclaimed all of that for the most part and closed up pretty significantly today. So gold up 1.7% on the day with MACD and RSI heading higher here on the daily. That's a pretty bullish sign. But the weekly tipping over. So I think I like exactly where we are. I think it's very strangle oriented for us right now. If we look at copper, pretty good down day on copper on the session. Now we're starting to head towards lows. We're breaking the 200 MA. We've broken the 21 EMA. We're heading lower on MACD and RSI on the daily, and then on the weekly, the thing is totally turned over. So copper heading lower here as well. This thing is starting to set up for some 112 action, I think. So I really like where copper is heading. Bonds on the day did rise fractionally, so up 0.3% on bond futures, on the 30-year bond futures. MACD and RSI trying to move their way higher, but really just stagnating sideways here. Would not be surprised to see bonds just continue to just tread water sideways a bit and let things kind of squeeze in. Now we've got some trades on there, which I'm excited about. And then taking a look at live cattle. So live cattle really in this tight range here. So let's take a look at this wedge pattern that we've been in. No good way to draw this exactly. So we'll take a look at this. So in this wedge, rising wedge pattern here, MACD just not very strong at all, showing, really, in fact, it's kind of negative, showing we may be running out of some momentum here. And RSI just not being able to get any direction going on the daily. However, the weekly, we're definitely seeing some upward mobility, some upward movement. We've had really 2 straight weeks of upward movement here. MACD and RSI have been rising. So overall, I think live cattle looks pretty good from a longer term perspective. A little bit weak on the daily, setting itself up for a strangle, and that's exactly what we did today. I'm not going to touch base on sectors, except to say, again, about half and half. We saw gold miners, oil, energy, real estate, all to the upside, led to the downside by semiconductors, regional banks, retailers, XLY, which is your consumer discretionary, pharma, healthcare, financials, all a bit weaker, but pretty mixed in here. I talked about this yesterday. A lot of really mixed sectors. I mean, we're just in a sideways trend right now, and the bigger names just kind of plowing along sideways. Apple, an update today, but not anything major. MACD and RSI rising. Microsoft, which has been on a pretty good move, had another 1% update. It has now entered overbought territory on both the daily and the weekly. Doesn't mean this run is over. It's making a new run at highs here, which it set yesterday. And Amazon down fractionally on the day today. Maybe running out a little steam. We'll see. Meta had a pretty good update today, so that's setting a new recent high as this thing continues to just power higher. Meta has been on an absolute tear since October of last year. Google on the breakout of the ascending triangle here had two good days, gave back a little bit today, but still looks solid on the MACD and RSI. NVIDIA taking a little bit of a breather today after a big breakout move. And then Tesla just plunging lower, another 3.7% to the downside. Now, Tesla, the weekly looks terrible, and we've been talking about how bad Tesla looks. I'm sure the Tesla people are not enjoying themselves right now. So if you're in Tesla, you're probably getting creamed because you limit your upside on covered calls and you fully participate in the downside with maybe a little bit of limiting action because of the covered calls. So again, I just don't like those ETFs. But Tesla itself just continues to fall. Tesla's down about 50 points now in 3 weeks, a little over 2 weeks on Tesla. So it doesn't look too hot either. All right, so let's take a look at a few things. I want to take a look at the Fed Watch tool real quick. So let's jump in take a look at the Fed Watch tool, and I want to look at the historical, not historical, comparisons. All right. So here's where we were in the last couple of days. So if we look at the January meeting, there's pretty much a nothing chance, a 93% chance that the Fed will do nothing. There's a very small probability of 6% of the Fed cutting at the January meeting in 2 weeks. Right now, I don't see enough data for the Fed to do anything. Inflation not going away, although the PPI number was positive to show some easing. But unemployment, CPI, definitely not looking good there. We're not getting the unemployment the Fed, I think, needs to see. So if we go out to the March meeting, which is where everyone's targeting, right now we still have a 20% chance that the Fed is going to do nothing. But in the last couple of days, since in a month, we've gone from a 39, almost a 40% chance of a cut to now a 74% chance of a cut from the Fed. So we're up to a 74% chance of a Fed rate cut. So it's looking more likely. And every day, the chance of doing nothing seems to be dropping, maybe because of the PPI data. CPI, I don't think really helped this cause, but it did move that way. So we're seeing a little bit more of a chance for the Fed to cut 25 basis points. And if we go out to May and take a look at May, we're seeing that there's closer to a 67% chance that we'll have seen 2 rate cuts by May. Is this accurate? I don't know, but 2 rate cuts by May is now risen all the way to 67%. And if we head out to June, that's actually dropped a bit to the fact that we may have there's a 53% chance that we'll have 3 rate cuts by then. So that's really where the majority of things thing. And you can see that there's even some chance of a 4th rate cut. I think that's bananas. I don't believe that. So let's take a look at our trading plan. I want to touch base on trading plan today. So it's Friday. I want you to think about your trading plan here. It's 2024. You've heard me harp on it. I show it every single day, how I'm tracking it, how I'm dealing with my plan. When you have a plan, you're going to be much more effective. When doing coaching and consulting for businesses, we look to put in structure. Okay, so structure is like the foundation of everything. You've got to have a process, a plan. You've got to have a budget. You've got to have all of those things in place. I don't care if you're a 1-person shop, a 10-person shop, okay, or if you're Amazon, Apple, Google, or any of those giant companies, okay, you've got to have a strategic plan, number one. So what is your plan? Are you trading your plan? Once you build a plan and you're not just winging it because I like this strategy and I'm going to do it, you got to have a written plan. How do you allocate your funds? What strategies are you going to be into? How do those strategies work? What are your trade rules? What are your guidelines? What's your mission statement? How do you have all of that? So I want you to make sure that you're working on that. If you don't have one, please get that done. Have a plan for what you're doing. It's all about having a plan. My plan helps keep me consistent. I want to be in trades that are reliable, mechanical, repeatable, okay? But it helps with consistency. It also holds me accountable. You know what else holds me accountable is posting my trades live. Okay? I'm not doing crazy stuff because I've got hundreds and hundreds and hundreds of, not thousands of members and people watching me. I'm not going to do crazy things, get people killed, and do stupid things. So holding yourself accountable is a pretty good opportunity here. I'm not saying go out and start a YouTube channel. You're not going to make any money anyway, but you can start a YouTube channel or something. Just get into a group and post your trades and your trade plan live. Okay, that's what our Discord is for. It's a great mastermind to do that. Come on in, build your trade plan, post it, post your trades, okay, and hold yourself accountable. And then others are going to start to hold you accountable and ask you questions. But get that trading plan done. So map out your objective. What are your goals for the account? Okay, goals in my account is to generate 3% income monthly. That's my goal, 36% annually. Been able to do that for years. Okay? If not exceed that, exceeded it every year for the last 4 years straight now. Okay, so we're in good shape. Okay, hitting our goals for the plan. Okay, and why? Because we got them written down. We know what we're doing, and we've got a plan to achieve those goals, at least at a minimum. Okay. I do focus on P&L, not necessarily the growth of my net lick, because I know that if I hit my P&L and my trading goals, my net lick is going to take care of itself. Okay, net lick can go down as the market dips. Okay, but it can only go down so far if you're consistently winning your trades. So I want to make sure that you're winning your trades here. So just understanding your goals, okay, and I want to make sure that I'm constructing a portfolio, okay, so I don't be consumed with watching the market daily. I've been posting this a bit recently, and just so that you know, okay, I think I talked about it yesterday. You know, the news is noise, and I keep seeing members and people posting stuff they're reading on the internet, stuff you're reading on Twitter, stuff you're hearing from CNBC. Okay, stop. Okay, that was the video from this morning. If you haven't seen it, go down there. Block out all of the noise. Okay, block out the FOMO noise if you're in Facebook trading groups and stuff. If you're an active member and it's a good group, fine. But if you constantly are seeing people posting news and other things that's getting you off center, get out. Okay. If it doesn't match what you're trying to do, okay, you got to tune out a lot of that stuff to the outside. Okay. We're not trying to sell you anything. I'm just trying to tell you to block out the news and focus on the probabilities and the strategies that you put into place. Okay. So I got to be able to block it out and not watch the market daily. I don't want to work that hard. Okay. And then I'm going to review my account briefly daily, making the necessary adjustment in trades. It takes me 10 to 15 minutes a day, and that's all that I have to put in to make sure that I've got those goals. How am I managing my portfolio? I've outlined it that I manage it by the Greeks primarily, and I'm going to be looking primarily at theta and delta, but the overarching tool is buying power. Okay, I'm looking at my buying power because even though my theta may be low, if my buying power isn't allowing me to put on trades, I'm not going to shoehorn trades in when I don't have the buying power. It's keeping me from doing crazy stuff and jacking up buying power. Okay, so I want my delta to not be more than 0.2% of my net lick, and my theta goal, okay, is 0.4%. And that's pretty heavy in pretty low vol times, like 12 VIX, something it's hard to get to. So I am low on theta, but I might be right at my buying power, which is my risk management goal. So buying power is a measure of my risk, and the goal is to be below 50% total buying power. Okay. So whatever my buying power is, I want to have my trades adding up to less than 50% in a normal environment. Okay. In a high vol environment, it may start to creep up as span margin creeps up. Okay, that's why we start at 50%. We allow ourselves all kinds of room to expand. I'm right at that 50. We're going to look at the account here, but 50% is my goal since trading futures is primarily going to use span margin. And I need to be able to have that goal because I have to be able to account for those span margin increases in my account. So in higher volatility times, I might get up 60, 70, maybe even 80% on high spikes in volatility. Okay. I have that buffer to do that. Volatility will always mean revert. Always. The market and stocks and underlyings and futures, they don't have to mean revert. Okay. So they don't have to mean revert. Nothing has to go back to flatline. Okay. It may pull back to a 21 EMA and then make its next move higher. So it may revert a bit and move higher, but markets can stay overbought. They can continue to move, but volatility will not stay at that high state. So volatility will mean revert. You've got to build yourself enough of a cushion to handle volatility mean reverting in your trade. So keep your margin down. Don't get risky here. Just because your theta is low, okay, make sure your buying power is driving your decisions. So drive your decisions based on buying power. And from a risk management standpoint, I will not risk more than 2% of my total portfolio on any one trade based upon my stop loss criteria. Okay? So if I stopped out on any of my trades, no matter what trade it is, I've sized them that my maximum loss, according to my rules, would only be 2%. Okay? So you're always going to be in good shape if you size your trades appropriately. So I don't mean trade small and trade minute. What I mean is trade of size appropriate. Okay. 2% to me is small. Okay. If I lose more than 2% in any one trade, I sized it wrong. Okay. Now, can I blow past my stop a bit and get some slippage? Absolutely. That's not what I'm talking about. What I'm talking about here is my targeted loss maximum is 2%. Frequently, it's even less than that. I also will never invest more than 60% of my max buying power in any one strategy in this trading account. This is a sizable trading account for me. This is my main trading account that we're running for the Income Navigator service is 400,000. And then I have a $1.2 million, $1.3 million PM account, which is different. Those, I'm much more conservative, 60% of max buying power in any one strategy. In a small account or potentially an IRA, you have some room to move to 70, maybe 80% of your account in a particular strategy because that strategy, you can't do so many different strategies. I'm going to show you how we figure those out shortly here. All right. And I don't go into a trade looking at profits first. I look at my max loss and I size accordingly. So I size not on how much I can make, but how much I can lose. Okay. I'm a chicken. I'm concerned about losing. I do not look at profits first. I look at my max loss rules and I will size according to that. All right. Trade rules I've talked about. You can see them. You can run through these on your own time here. I've got 18 trade rules, starting with rule number 1 of plan your trade and trade your plan. Don't trade without a plan for entry and exit. I've seen some people copy these exact rules and use them out there. Fine. If these rules apply to you, copy them, share them, do whatever. I really don't care. Okay. What I want you to do is make sure you have rules. Okay. I got 18 of them that shows what I need to do. And then I have a total portfolio management structure of how I review the markets nightly here with my with my charts and my tracker, which I share with you guys every single night. That's part of my daily management. I'm sharing my daily management with you. I'm then looking at my delta, my theta, my buying power. Can I put on trades? I'm dealing all of that at night so that I plan tomorrow today. Okay, so I'm planning for tomorrow tonight on these uh, things. And every day I will review my portfolio. I'll review my trades, what can be taken off, what should be adjusted, what should be closed. Do I have enough BP to add new trades? I identified some new trade potentials the night before. If BP says yes, you can. I'll look at my theta, my delta to determine what strategies may work best. But really what I'm going to do is I'm going to go down my order of strategies. Okay. And I haven't a specific order of what strategies I want to use. I'm going to go down those orders and I'm going to make sure that I have the appropriate sized and number of contracts trading in each strategy that I have. We're going to talk more about that next week, right? And then let's take a quick look. So there's a little bit of the trade plan. That's only 2 pages in to a trade plan that's pretty lengthy here. So you get a good sense of what that looks like. So let's jump into the tracker and see how this looks for today. End of day, 294 on delta, 0.07%, totally fine, very delta neutral. Theta bumped up a little bit to 843 today, which is 0.21%, so a little bit of a bump in theta, which is nice. We finally broke our streak of 8 straight, of nine straight, is it 8 or 9? 9 straight up days, it looks like. 8 straight up days to start the year. We broke our streak today. We're still sitting in really good shape. BP usage climbed a fractional today. We're still at 49%, almost 50% even, without bill being factored in, which is our 1 to 3 month ETF on Treasury bills. We did realize another $1,905 in profits today, putting us at a nice 4180 for the week. So we've made $4,180 this week. In this account, we have now earned $11,575 on the month. We're up 2.93, so we're basically right at our goal, and it's only the 12th. We've actually earned 11,180, 2.83 on net lick. as well. And if we take a look at our strategies here, uh, what do we have working? We're down a little bit because we had a 1-1-2 that we turned into a black swan hedge. Cost us $130 to do that. We have a winning gold strangle this month, so we're up 2,600 in gold strangles. We're up 500 on future strangles. We're up $895 on ES 112s. We're up 47.60 on oil 112 trades. We're up $1,680 on other 112 trades on futures that aren't part of this mix. So overall, we're up $7,300 just on futures trades on 112s. So that's doing pretty well. And 3,100 in strangles. We've got a FB 112 trade that we had a loss on that, only because the put debit spread expired this month and we'd already taken the profits on the naked puts last month. Otherwise, the trade is a net winner. It's just in 2 different years. And we've earned $1,900 on our spec trades so far this year. So not bad on spec trades. My goal is nowhere near that. So my goal is nowhere near $1,900 a month, and we'll get into my goals on another session. All right, but my goal for the month here is $11,866. I'm $291 short of my entire monthly goal with only 12 days into the year. Wins and losses are in pretty good shape. 13. I don't know if that's exactly correct. To 16. Yeah, looks like it. So these look, yeah, 13 trades. So we got 13 trades on here. Yep. 2 of those are not RNAs. So yeah, we're 13-0 on the year so far. Win rate's 100% on our trade. So we're doing really, really well, like where we are. Let's talk briefly about the trades we closed today. We closed yet another 0 DTE winner. This one closed in 15 minutes. So we made $225 in just 15 minutes in this trade. It was a pretty easy call credit spread that we put on this morning. 15 minutes later, that thing was off for money. And then we closed the naked puts on an LE strangle, or an LE 112. Sorry about that. An LE 112. We booked the profit on the naked puts at $1,680. So another great winner there. Those numbers are reflected here. So, so far, so good. Having a great year so far. Big thing for you guys out there today is if you don't have a plan, get that plan. I have a pretty in-depth, decent trade plan. If you're in our Discord, you guys get a copy of that and you make your own. We ask our members to share their trade plans so you can see trade plans from all shapes, sizes, ages. We have 8 people ranging from 20 years old or less up into their 80s in the group, sharing trade plans, whether it's IRAs, trade plans, big accounts, small accounts. I'm running a 15K account. We got Stacy in her $25,000 account. We've got a $400,000 account. We've got $100,000 accounts. We've got IRAs at 200. We've got IRAs at 1.2 million. We've got other larger accounts out there at 1 point something million to 2 to 3 million. So you're getting a chance to see what other people are doing as far as what are their trade plans, what are their trade strategies, and they're posting their trades live. So it's a giant mastermind of really, really, really good traders hitting 20, 30, 40% a year. Okay, having great years. If you want to, don't learn just from me, come and see what the rest of the group is doing. If you want to see and join in, see what everyone else is doing, hit the link down below. Use KING as a coupon code for that first month. Take $50 off the 150 membership. Okay, invest in your own education, invest in you and your family's future. Have some fun while trading. All right, that's it for me. Okay, I want you guys to have a great rest of your weekend here and enjoy yourselves. Okay, the whole reason we trade is to be able to have more time and fun with our family. I'm not day trading. We're not spending every doggone second in the market watching screens, reading news, fretting over accounts. Okay, we trade our plan. Okay, we trade strategies that doesn't require more than a few minutes a day in our account so that we have time to enjoy the fruits of our labor with our family. So have a great weekend, everybody. Take care, and we'll see you in the next week. And Monday is an off day For the markets, futures are open half a day. Stock market itself is closed. It's all good. Gives us a nice breather day. I'll be doing some training that day. We'll be doing some IRA training on Monday. You want to see how we set up an IRA? Join up this weekend and be there on Monday as we go through how to set up the trade plan, strategies, trade tracker, all of that stuff for the IRA account, and how we figure out what combination of strategy, what strategies and what combination, what percentages of those. We're going to do all of that on Monday. All right, everybody, take care. Have a great weekend. Be safe. Bye-bye.